Hey, Rob GillT channel. You're watching the channel all about property, Cape Town and South Africa, and all about fun as well. Today, I want to talk to you about whether you should invest in your property now while the interest rates are low, or whether you should wait until a market crash. Okay? A housing market crash, the big one. So that's what we're talking about today. Should I invest in property now in Cape Town, South Africa, 2020, while the interest rates are low? Or should I wait for the market crash? Let's get to it. So here's the thing, guys. Why would you invest in property now? Why would you purchase a property now? Well, clearly interest rates are at their lowest since 1978 in South Africa. It's like huge. So it's a really great time to get invested. And of course, if you can now fix that interest rate for the future, it's maybe a good gamble. It might be the thing to do. But will it work out for you? Will property become cheaper in the near future? Now, the one big thing I've got to say to you guys is this. When this coronavirus thing came out, we were all looking at it and thinking, when we come out of this, there's going to be so many houses for sale. And that didn't happen. So it's a bit like if you're waiting for a market crash, if you're waiting for something to go wrong in the housing market, think for yourself, if you've ever invested in the stock market, okay, they've got a thing called timing the market. Nobody can really time the market. Timing the market is a near impossibility, okay? So what the rich guys tell you in the stock market is pick a company, pick the best one, put your money there and let it ride, okay? Invest for the long term, not for today, not for the short term. And kind of the same principle will apply if you look at property. Now, the big thing here is if you're buying it as your home, all right, this is a good place to put your money, firstly, because a house that cost 250,000 Rand 20, 30 years ago will now cost you 3.5 million Rand in the same place. Well, it depends where you are. If you're in a really bad place, maybe not. But here's the thing, okay? Will you make a profit? Will you have made a huge profit between that 250,000 Rand and that 3 million Rand now? Probably not. It's probably worth the same. Because everything from 20 years ago you can add a zero to now, and that's the problem with cash. So a lot of people say cash is the thing, hold cash, cash is king, cash is the way to go. But what does cash do for you? This is what they taught you at school. They taught you at school that it's good to have cash, all right? It's good to hold money. But money is effectively really worthless. If economies go down, if economies crash, if the country has a hard time, your money goes with it. The value of your money just crashes out and drops out of the bin. So it becomes sort of valueless, effectively, over time. So if you're taking your 250,000 Rand 20 years ago, 25 years ago, whatever the case, put it in the bank. Now work that out on interest, okay? Because not everybody's a savvy investor. Not everybody can walk into, say, the stock market and say, get 250,000 Rand and make huge profits. Most of you will lose it, okay? Most of you will take your money and put it in the bank at the local interest rate, which is generally way below inflation, even though they tell you it's not, okay? So when you look at how much you've got today, from that money that lay in the bank, if you never touched it, because you will touch it, but if you never touch it and you leave it there and you say, that's my pension, and you come back to it today, it'll probably be worth half the value of your house, okay? And remember, if you didn't purchase a home, what would you have done? You would have rented. So you would have been paying rent from that time till now. So let's take a bond at 10%, right? You would have paid 2,500 Rand a month back then. It would have been a fortune, let me tell you, it was a lot of money, okay? But you would have carried on paying that 2,500 Rand for 20 years if you only paid that, if you didn't pay into your bond. 2,500 Rand today is nothing. It's peanuts, okay? But if you were renting, you would have started paying 2,000 Rand a month and you'd have been paying 20,000, 30,000 now, okay, for the same house, if you'd stayed in the same house. So all that money would have been coming out of your bank account and going into the rental. What wealthy people will teach you, rich people, is use other people's money. That's how they become wealthy. They use other people's money. They don't use their own cash. Having cash in the bank is not real wealth. Having cash in the bank is like, okay, I'm well off, I'm doing well, I'm okay, I can retire, I've got some bucks in the bank, it's brilliant. So I've got a couple of mil, big deal. The oaks that are using other people's money are driving around in Lamborghinis, Ferraris, okay, hundreds of millions, and they look so wealthy, look like they've got, the world is just going crazy around them. The cash they keep for themselves is for themselves. Every investment they do is with other people's money. Bear that in mind and keep that in mind. But the big question we were asking, obviously, is should I invest while interest rates are low and lock it in, or should I wait for the market crash? And I think you can hear from the way I'm talking to you that we're not waiting for the market crash, because it might never crash, and interest rates might go back up, and I mean, there is a saying, one in the bag is, I can't remember what it is, but take what you can get, take it now. I mean, it's like getting an offer on your house. If it comes in and it looks good, take it, run, move. Waiting for the next one, it might never come, it might never appear. I mean, we don't have crystal balls, none of us are fortune tellers. Fortune tellers, I mean, goodness me. And the other thing I'll say to you is if you want to keep your cash, by all means, and nothing wrong with that. I mean, it's maybe it's a safe haven. Everybody calls cash a safe haven, but that's what they teach you. They teach you that cash is a safe haven because they want to take it away from you. Okay, and the best way they can take it away from you is to devalue it, take it away. Okay, it's not a safe haven. It's probably one of the worst things on earth to have. Assets are the thing to have. The more assets you've got, the better off you are. And if you've got someone else paying for those assets, even better. Okay, so be very careful of the cash thing. I'd say it's good to have some cash. Obviously, everybody needs some, but by the same token, I wouldn't call it the safe haven. I'd call it a dangerous place to be when markets are crashing, when the world is crashing, when things are falling around you, because it devalues and inflation takes it over, and it's not good for it. So I'd rather take the money, okay, and throw it into an assets, okay, at very low interest payments, because it's cheap money, right? If I borrow money to buy the purchase, it's even better because it's cheap money. You can actually keep the cash if you really want to, and you can borrow against it, and so on and so on, and pay less for it. And yeah, interest rates are cheap. So buy the house, buy the property, buy the investments, pay less for them, and own them. Don't wait for a market crash. A market crash might never happen. If it does happen, okay, go back 20 years, all right? If you're so concerned about the market crash, go back 20 years, all right, and have a look at what you were paying then and what you're paying now. Did you lose money? No. No, you didn't. And you went through crisis. 2008, you went through crisis. 1996, you went through crisis, okay? So don't tell me that things are going to go bad because there's a market crash. There'll be a dip. If there's a crash, there'll be a little bit of a, and it goes back up again. And in 20, 30 years' time, your investment's still there and it's still strong. But your cash, is it still as valuable as it was before 2008? No, it isn't. It's lost value. So that's just my point of view. It's just a thought, like, I'd rather get in, lock it in, get it now, okay? Interest rates could still drop, that's great, but interest rates you'll never get back if they go up. If they go up, you've lost your deal. Market crashes will come and go, they'll go up and down. The amount is negligible. What you've got to do is look over the long term, take a graph and look over the long term, where it starts, where it ends, and you'll see it just keeps a good old long run up, even through those little blips, okay? My point of view, invest now. Now's the time, now's the go. Okay, so with that, I'd like to thank you for watching the video. I hope you've enjoyed it, but smash the subscribe button, okay? like the Facebook page and follow me on Instagram. And while you're here, leave a comment, have a look in the comment. Let me know what you think. You know, everyone's got their opinions, and you know, by definition, because you're wrong doesn't make me right, or I'm wrong doesn't make you right. It's a discussion. That's what it's all about at the end of the day. So yeah, leave your comments. Let me know what you think. And by the way, pop down to the website below. There's some really fantastic promotions on the go. Put them out there for you. Go and have a look at it. And I've got the varsity there, the school varsity, for you to learn how to make money, how to enjoy money. And it's all free. Just go in there and click on it and go and check it out. So thanks, guys. Till next time. Rob GillT. Cheers.